Hello, everyone. Thank you very much for being here. So yeah, I'm Raphaël Bloch, one of the co-founder of TheBigWhale, which is the leading business information platform about digital assets in Europe. I'm very glad to be with you guys for this very interesting and challenging panel because we will talk about tokenization and even more reimagination of tokenization. Can you just briefly introduce yourself, and after we will have this interesting conversation. Thanks.
Sure. Yeah. Thanks, Raphael. Hi, everybody. I'm Graeme Moore. I'm the co-founder and head of tokenization at the Polymesh Association. I'm also the author of the first ever ABC book about Bitcoin called B is for Bitcoin. So if you need to tokenize any assets or you have a child who needs to learn their Bitcoin ABCs, you can come talk to me after. Thanks.
Hey, I'm Jason Teutsch, founder of Truebit. Mathematician by training. Truebit, it was originally the first, probably best known as the first scaling solution for Ethereum. Also the technology used in the verification game is now used for optimistic rollups. And yeah, we made certificates for smart contracts. Now we're doing them for RWA as well. Thank you.
Thank you. Hi, everybody. I'm Paul-Adrien, Hyppolite, co-founder and CEO of Spiko. We are a fintech company based in Paris, and we tokenize for now money market funds and hopefully all asset class, all securities one day.
Thanks. Graeme, I would like to start with you. So, given your experience in the tokenization, can you just tell us where we at now and how you see the evolution of tokenization?
Yeah, we're still at the very, very beginning of tokenization. So I've been doing this since 2017, back when Polymesh was a company, Polymath. We built the first tools on Ethereum to create security tokens. And so we didn't call them real world assets back then, we called them security tokens. But so we built the first point and click interface so anyone could create one of these assets. We built the first standard called ERC 1400, which was an extension of ERC 20. And if in 2017 you asked me where we're at, I'd say, yeah, we're in the first innings, but we'll be miles ahead come 2018, 2019. We'll have trillions of assets on chain. They'll all be regulated. Regulators will love security tokens because they have real-time access into these markets, and everything will be peachy keen. But it's 2025 now, and we're still not really there. We finally saw a few months ago BlackRock deploy the BUIDL fund, so BlackRock, major asset manager, playing with real-world assets. We've seen Franklin Templeton, we've seen another asset managers get into the game, but we're still very, very early.
And why have changed since 2017? Why do you think that right now, this is the right moment to be in this field?
Yeah, I think just time was one of the biggest things. In 2017, we would go to asset managers like BlackRock and we would say, hey, you guys have to check out this technology. It's amazing. And they would go, crypto is a scam. No thanks. Like that was literally what banks and asset managers would say to us less than a decade ago. And now we see they're actually using the technology like we always knew they would. So I think just time has been the biggest thing. It's taken time for these asset managers, for banks, to get comfortable with this technology and realize, okay, no, there's a real technological innovation here, and we need to actually play in this space because we can do things better, faster, cheaper.
And so, Paul-Adrien, you launched Spiko now, 18 months ago, but you're live
6 months or so.
6 months, yes. Can you tell us more about what you are doing, and can you explain us how you leverage tokenization, especially about money market funds?
Yeah, sure. So first of all, I agree with Graeme just said. We are at the very, very beginning of this. And one example is we talking about UCITS funds, for instance, which is like the most common type of fund in the European Union. That's the equivalent of mutual funds in the US, so publicly accessible by anyone. We've launched actually 6 months ago, or a bit more, mid-June last year, the first UCITS who operate actually on public blockchains. What operating on public blockchains means is that the shares of these UCITS funds are created as tokens, fungible tokens on Ethereum, on Arbitrum, on Polygon, etc., etc. So the very, very beginning of this institutionalization phase. And I agree that probably the main reason why this took a few years, for sure, is that asset managers, custodian banks, etc., needed sometimes to get comfortable with this new type of database, which are decentralized, which operate 24/7 across the globe, etc. And now, you mentioned BlackRock, there's us with Crédit Agricole, with Cassis in the European Union. That is changing for sure. And I see many asset managers getting really interested in the space. That's obvious in the US, but that's also true in Europe.
And what's the biggest challenge when you tokenize something, and especially in finance?
I mean, it's mostly about, having all the regulated entities you need around the table to be comfortable with the tech. When you launch a fund, for instance, you need to have a depository bank, which is a custodian bank and also controlling the fund activities. You need to have a valuator calculating the NAV, so the value of the fund share every day. You need to have an asset manager, and you need a transfer agent. In our case, we operate on the transfer agent business, so we have developed the technology to do this, the maintenance of the shareholder register on-chain, and we operate on the distribution side of things. And I'm mentioning distribution because what took some time also was to figure out who would buy, this new form of securities.
And actually, who's buying money market funds? It's only institutions. It's also maybe retail.
So in our case, we have the ability to onboard retail investors. That's a big difference with BlackRock, with Biddle, for instance. So for sure, we do have some retail investors in our cap table. But that's mostly for now startups, foundations, and VCs who used to have tokenized cash in the form of USDC or USDT, not earning any yield by design, and also having counterparty risk. I mean, at least higher than with a money market fund share. So these guys, when the logic iteration, if you want, after tokenizing electronic money, was to tokenize money market funds. So that's the main entities buying these products right now. And you have also other use cases that are coming up. I heard like Leo mentioning that in the previous panel, crypto funds getting interested into that because that's a potentially new collateral that can be used to post on trading venue, to collateral OTC transactions, all this stuff.
Okay. So we started to, we tried to tokenize almost everything back, in 2017, 2018. After all, we found out that it's maybe more efficient to tokenize cash and bonds. Jason, what are the most promising tokenized assets? It's only about cash and bonds, or can we imagine that in the future we'll tokenize everything? And Graeme, I would be glad to hear you also about this.
I'll answer, but I also want to rewind and get a chance to answer the previous question. So
go ahead.
I've heard the word BlackRock come up on both sides of my face here, and I think, yes, there is an attitude change with the institutions, but even more so is, and among, maybe the world is somehow ready for it, but I think we don't need to wait for BlackRock. It's about the people. We also have new technology, which is, I think, something that's really important, and to understand that this is an equalization and that we don't have to be settled for this, what I consider an overweighting towards reputation, which depends on institutions like BlackRock. First of all, that's what's going to be next. And to rephrase this in terms of, if I may reconstitute what Vitalik Buterin said at the launch of Ethereum, the best application for RWA is the one that I haven't thought of yet. I do think this is exactly correct. I mean, let's take an example. So, the Trump meme coin, for example. Okay, you gave us a meme coin, but why doesn't it come with rights to ownership in SpaceX? When I hold this token, why don't I get access to privileged information at the US Treasury? And you tell me it's about, say, for example, an assassination attempt. I don't want to hear about past events. Tell me about what's happening in the future and make it an insurance against, if your policy goes off the rails, this is going to be an insurance against. I'm just saying it's time to open our minds and be a little bit more creative about these things. But you raised a really interesting point. But so why do we have meme coins like the Trump one and not more
tokenized assets, like, of course, bonds, but maybe more equity, real-world assets?
I think we have to think about this as a spectrum, right? On the one hand, you have these things that are purely traditional assets, like equities that are traded on publicly traded things are simple. They have a price that the market determines the price, and exchange traded funds or securities on the New York Stock Exchange. And then on this other side, you have a tradition of NFTs, which don't really necessarily represent anything. But there's this whole space in between where we can get really, that's where things I think get really creative and interesting. And a lot of the estimates that say how big RWA is going to be don't even take it into consideration. But anytime you can put together a metric, anytime you can prove the metric. So I think also this is where the technology comes in, because put simply, if you provide verified information to investors, you're mitigating their risk, and therefore your asset is going to be worth more. And as people begin to understand this, we'll feel empowered. Asset classes that currently are infeasible because there is either too much overhead or too much risk are going to become possible. And really anybody in this room can create. You don't need to join BlackRock. Yeah.
And so, Graeme, on this, is it exactly the same thing to tokenize a bond and real-world assets, stuff like this? What's the main difference? And
so a lot of things are treated identically in terms of like the technology, right? Like what a blockchain understands, a token is a token is a token is a token. They're all tokens, right? And so where different things come in is in regulation, right? So some funds can only have accredited investors, for example. Some have to be institutional investors. Some types of assets can have anybody own them. So I would say really what's different between tokenizing a bond versus cash versus anything else is really just comes down to regulations.
Okay. And so with Polymesh, what are you providing not only for crypto native startups, but also maybe for, so not BlackRock, but other financial institutions? Or?
Yeah, so Polymesh is a layer 1 blockchain built specifically for real world assets. And so I mentioned we started back in 2017, we were building tools on Ethereum. And so we kept trying to shoehorn in what we wanted Ethereum to look like for financial securities for regulated assets. But it's very confusing and complicated to do that. You have to have smart contracts, talking to smart contracts, and I know we're at sort of like a crypto event where everybody loves smart contracts and they think they're the greatest thing in the whole world, but they're very computationally expensive to execute. If you have an asset with certain rules and requirements in it where only certain people can trade it, maybe there's a 24-hour volume transfer restriction, which is the case for certain assets, you have very complex and computationally expensive trades every time you want to send an asset from person A to person B. So we said, instead of trying to shoehorn in these things on Ethereum, let's build a blockchain specifically for this one use case. Like Jason mentioned, like Vitalik back in 2014, 2015, talking about Ethereum. Him and his buddies would walk around conferences with a shirt that said decentralized Uber, and then on the back it said with one line of code. He didn't say how do we make bonds more efficient. That's not what he cared about. That's what we care about. That's the only thing we care about. So Polymesh has made certain design decisions to look at just how do we make financial securities work best on a blockchain rather than worrying about decentralizing Uber, for example.
And what's missing? Because, okay, BlackRock and some financial institutions are working on this, but still we know that the vast majority of them are quite reluctant to get in this space. So what's missing? Is it also about certification or security? How do you manage this, Jason, Graeme, and also Paul-Adrien?
I'll touch on it briefly. I think, again, it's just time. I would actually disagree. I would say everyone is looking into this.
So everything, is already available. It's just a matter of time.
I think so, yeah. Right, so there are tons of reports that anybody can go look up online. The costs you can bring down in the origination of bonds, the trading for equities, all these various things. It's really just, and one interesting thing, we talked about BlackRock. My buddy's head of digital assets at BlackRock, Robbie Michnik, so I'll steal something that he loves to talk about. There's this interesting bifurcation of the market right now where you're giving Bitcoin in a traditional wrapper so traditional investors can buy the crypto thing, and we're also taking the crypto thing tokenization and putting it in a traditional wrapper so that traditional investors can use the digital rails. The Bitcoin ETF wrapper stuff for traditional investors is actually way easier of a sell because it's very low risk. Whereas re-architecting your whole entire capital market system to be run on blockchain rails, that's a huge technological risk. So I think people understand that it is very risky to do that, to upgrade the whole entire capital markets tech stack, but it is something that they know is going to happen, and we've heard it again and again from a ton of different players. It's going to happen, it's just a matter of time.
Okay, interesting. About certificate, yeah, go ahead.
Yeah, just a few words on what's missing. I think what's mostly missing is demand, and use cases.
It's a big thing, actually.
Because and stablecoins took off because you needed an asset to trade on crypto exchanges initially. Then, see what pain points are you actually addressing? Now it's pretty obvious that stablecoins are also addressing a pain point in correspondent banking. So you see these use cases around API orchestration, bridge, all these guys addressing this issue. And then why money market funds? And why are we doing this in our case? Why do we think that's the next iteration? Because you also address specific pain points. Access to the risk-free rates. It's something that is very trivial in the US, likely in the UK to some extent, but not in continental Europe. So you want very smooth access to your risk-free rate and your money earning yield every day. The second thing that it will address is collateral transferability. When you want to post, you're a trader, you post collateral on the CME, for instance, and then you want to transfer it to Eurex in Europe. It takes several days. On chain, it takes a few seconds. So that's the kind of concrete use case that we are enabling, and we need to focus on this before thinking about what's next in our view. And next question would be, okay, if we tokenize equities, for instance, what do we solve as an issue?
Okay, interesting. About certification, Jason, so you're working on this. Do you think that it's mandatory to have these kind of features in the market?
Sure. I think if you're going to make a digital twin, you want it to look like the thing that you started with, for sure. So I think, as I said before, the more features that you can prove, the more creative you can be with the assets, and the more valuable your assets can become. So yes, and then there are, and these can be really simple things, even with take a stock, right? Do you actually own the stock? When I move the token, does that actually legally transfer rights to that, to the equity? But even looking at stocks, think about what happens when you take, for example, start with a private or publicly traded stocks are very different from privately traded stocks because you don't even have the price anymore, right? So it's kind of like, imagine what it would take to say, just to take an index, a publicly traded index fund. Like, how would you make? There's this opportunity to create all kinds of indices that are just like infeasible because there's too much overhead, but we have to rely on some more technology. So I think, I'm going a little fast here, but I know we don't have a lot of time.
No, it's fine. You can. So, just can you explain a little bit how you manage this certification? Where is it? And it's for more, the buy side or the sell side of the asset?
Me personally, so I'll do the Truebit perspective is we provide real world proofs for real world assets. So really formally what this translates into in nuts and bolts is we're going to create certificates, we call them transcripts for code executions and transcripts for API calls, which, if you want to compare it to what you get with a snark, we also get a timestamp associated with it because it's fundamentally we do them with blockchain and economics instead of think verification game like optimistic rollups instead of pure cryptography, what you get there. So not to get too far into the weeds here, but I think it makes a difference because when you think about if your target is for applications outside the blockchain, it's a different toolbox than if you're trying to support layer 2 applications, for example. So yeah, that's kind of how I see it, because those are the two basic building blocks that you would always need. It's not everything, but you also it's also a matter of recognizing where and when to apply it, and so that's an awareness issue that we are gradually overcoming.
Okay, let's guys imagine, so we are in 2027, 2028. So Graeme, you'll think that everything will be tokenized on, layer 1s and blockchain, or do you think that we will have the financial system, also blockchains? How you see the bridge between those two worlds? And also I would like to have your point of view, Paul-Adrien.
Yeah, I think if we're at the beginning of this and we're in the first inning, to use a baseball term, we'll be in the second inning 3 years from now, right? Like everybody thought this was going to happen overnight. It's great, amazing. Let's tokenize everything. Doesn't really work like that. As Paul-Adrien was mentioning, we have some use cases now. We have money market funds, we have tokenized cash, we have things like that, and people are excited about them. And there's actual use cases that people want to use, but it just takes so long for the behemoth of the financial world to move and do anything, especially when it's a new technological paradigm. I said earlier, time was really all we were waiting for. It's also privacy solutions are a big one as well. So when you talk to banks, when you talk to asset managers, they're very concerned when they say, yeah, but it's a public blockchain. Everyone can see all the trades I'm making and all the trades my clients are making. They will not broadcast that information on a public blockchain. And so you have players today like SocGen that are doing billions of dollars a day with their repo agreements, with their repurchase agreements on their private blockchain solutions, because they realize that private blockchains actually work really well. Asset managers and banks do realize that public blockchains are the future, but what we have to do as an industry is get them comfortable and build good enough privacy solutions where they're comfortable broadcasting, okay, maybe a transaction happened, but you don't know exactly between who, you don't know exactly which asset transacted, and you don't know exactly what price that transaction was closed at. That's the things that we have to work towards as an industry to get, everything tokenized. We're still not going to be there in 2027, but we're going to be getting closer and closer as time goes on, eventually until everything is tokenized. I do believe everything will be tokenized, but again, this is 5 years, 10 years down the road.
And what's the next, tokenized assets? So after money markets funds, cash, and what do you think is the next frontier for the tokenization?
One thing that we're seeing a lot of demand in is real estate. So real estate's a gigantic asset class, and the real estate owners don't necessarily always care if people can see their information. So they're not always concerned about privacy the same way a bank is trading stocks and bonds every day. So one use case we've seen a lot with real estate is $100 million asset. There's 5 to 10 investors. Investor number 8 wants to exit 20% of their position. They put it on a liquid secondary market. People can now bid at an appropriate price. And the deal can close that second. And settlement can actually take place that second because we're using a blockchain. Whereas in traditional markets for real estate, that transaction might take 30 to 60 days to close. So really speeding up that time for transaction in the real estate market is something we've seen really big. And so kind of after mutual funds, money market funds, we think real estate's the next really big thing to take off.
Okay, interesting.
Now, in my view, just to complement that, in my view, it's the next frontier is treasury bills and ETFs. So we've tokenized money market funds, which are the wrapper on top of treasury bills. Now, a question could be when governments will be willing to tokenize actually the underlying, so the treasury bills themselves, and also when would we be able to list on trading venues these sort of securities. And that's ETF, exchange-traded funds. They are, big barriers to that, cultural barriers for governments to be comfortable using blockchains to issue their securities, first of all, when it comes to T-bills, and also regulatory barriers for admission to trading of tokenized securities. if we take the European lens, we have a first regulation to enable that. So we are sort of moving in that direction, but there are...
You'll...
Yeah. Oh, here we go.
Thanks. But you know, there are strict limits in this regulation, which to be honest makes it quite difficult to do that right now. So just to say that with these two examples, to see, you know, how far we are from having all asset classes, all financial markets moving on chain, it's still like decade-long transition, I think, before we get there.
I'll answer. So I think it's first of all, we shouldn't get wrapped around the axle of this format of token, because I think understanding these assets can be captured, especially when it comes to intellectual property and things like that. That there's things that are actually even right around the corner. I know it might not seem like it, but I'll go out on a limb here and say biotech. I'm going to maybe in insurance. Certainly private equities. I know that's I agree with real estate, but I think really the one that comes next is up to us, where it's not just going to happen. It's going to be because somebody in this room decided to do it. So let's see. Step it up.
Thank you very much, guys. It's exactly the time. So thank you. Big round of applause. And if you have any question, feel free to ask them. Thanks.